Welcome to the Disciplined Traders Academy Demystifying the Stock Market digital course. If you are brand new to the stock market and considering opening your own trading business or investing, this is the place for you to be to start learning the foundations of what you need to understand how the stock market works, the risks, and the opportunities that are available to you with the stock market. Now, this course also has an accompanying workbook, so make sure you download that workbook and you follow along in the workbook along with this course and fill in those answers. That interactive process is going to help you learn and retain this material. And again, you will have lifetime access to this course, so you'll be able to watch this course as many times as you like. Now, the course is broken up into 5 different sections. So each section will be about 15 to 20 minutes, and then we're going to take a break, and then a new section will become available for you. So this will not be one video all the way through. We're going to do it in sections because it's a lot of material for you to learn and digest. So today we're going to cover understanding your motivation for financial freedom. We're going to talk about learning the basics of how the stock market works. We're going to give you an introduction to stock market terminology. We're going to cover the indexes and the ETFs, also known as electronically traded funds. We're going to give you a high-level introduction to technical trading, and we're going to talk about the tools that are needed for your trading business. So those are the learning outcomes that you will get out of this course. All right, so lesson 1, we will cover why you want to learn to make money in the stock market. In the second section, we're going to talk about market basics and market terminology. In the third section, or third lesson, we're going to talk about understanding indexes and exchange-traded funds. In the fourth lesson, we're going to talk about charting basics. And in the fifth lesson, we're going to talk about tools of the trade, what you need to have to set up your trading business. All right, you excited? Let's get started. Lesson number 1, what are we going to cover? So first, we're going to talk about why you want to learn to trade in the stock market. This has nothing to do with being in the stock market itself. These are questions that you need to ask yourself before you delve into the market and decide you want to establish a trading or investing business. We're going to talk about what to expect if you're going to trade in the stock market. We're going to talk about mindset, and we're going to talk about patience and discipline. All right. So the first question is you need to ask yourself why you want to learn to make money in the stock market. This is a very important question that you need to step back and ask yourself, because I can tell you from experience that if you do it for the wrong reasons, you will lose money. Guaranteed. Okay, you have to be doing this for the right reasons, and you have to be doing this with the mindset that when you start trading or even investing, it doesn't mean that you're going to have profits in the bank tomorrow. That's not how the stock market works. See, the stock market doesn't care about us. The stock market doesn't care what our beliefs are. The stock market doesn't care what we think about the market. The stock market doesn't care how much research or analysis we do. And the stock market certainly doesn't care if we have to make a mortgage payment tomorrow. Our job when setting up a trading and investing business is to learn how to ebb and flow with the market, to take profits between the top and the bottom and not be greedy. So if you are going to open a trading and investing business because you need money right away, you need to make that mortgage payment tomorrow, you need groceries tomorrow, you need money in the bank today, do not take that money that you want to utilize in the stock market and put it into the stock market, because the chances of you losing that money are very, very high. And that money needs to be allocated towards living. Okay, so when you start this out, although we certainly can start with as little as $1,000, but that needs to be allocated towards a long-term trading plan. So taking money that you need to pay bills today and put it in the stock market is not a smart move. What you want to do is you want to start learning how to set up your trading and investing business, getting the education, learning how to invest and trade in the stock market, so that over time you can start to develop patterns to profits and consistently learn how to make money in the stock market to start to augment your lifestyle and maybe eventually even replace your job or allow you to make a transition in your lifestyle. Okay, so learning how to trade in the stock market is not an overnight success story. It takes time, it takes energy, it takes continuing education, it takes patience, and it takes discipline. So make sure you are doing it for the right reasons. Okay, What do you expect when you trade? Well, there's 4 things for sure that you can expect when you trade. Number 1, expect that you cannot eliminate your emotions from trading. I hear a lot of people talking about, that you have to trade without emotion. And if you have a trade thesis set up and a game plan, you will not have any emotion in the trade. That is just simply not true. We are human beings. We are going to have emotion. What you will learn to do over time is that you will learn to manage your emotions alongside the trade. And if you do have a strong trade thesis every time that you place a trade and you have a plan to manage the risk, then you can start to manage the emotions that go alongside the fact that you have money in the market. So you will learn to manage your emotions alongside the trading. What's the second thing you should expect when trading? Well, expect that you're going to have losing trades. Okay. You will probably lose 40 to 50% of your trades. That is just a fact. We all lose and have losing trades. Anybody that tells you they don't lose when they make trades or investments is flat out lying. Okay, so you need to go into this expecting you will have losing trades. But what's the difference between having a successful, profitable trading business and having a failing business where you blow up your account? It's in the strategy and the discipline of how you set your trades up. Okay, so further down the road, when you start taking the courses on the Disciplined Traders formula, you will see that we always go into a trade looking for a minimum of a 2-to-1 risk. What does that mean? It means that, for lack of a better example, for every $2 that we expect the stock to go up, we expect to get a $2 return on our investment. But if that trade goes against us, we're only going to lose $1 because we're setting our exit at that mark. So in order to set up and establish a profitable trading business, we have to set it up so that our losing trades are far less of a percentage drawdown on our account than our winning trades. We want our winning trades to outpace our losing trades. Number 3, what should you expect when trading? Do not expect the market to care about you, what you think, or what your need is. Okay, and our job is not to beat the stock market. We won't beat the stock market. We can't beat the stock market. Okay, our job is to coexist with the stock market and take small chunks of profit along the way. The 4th thing that you should expect when trading is do not ever expect to call the top or the bottom of the market. Our objective is to take profit from the middle section of each trade. Okay, it is virtually impossible for anybody to ever truly call the top or the bottom. And if you do try to call the bottom, or you do try to call the top, those trades will backfire on you. So we never try to call that because the reality is we just don't know. Okay, mindset. So learning how to set up your trading business definitely is about education, right? The more education you get, you will find yourself becoming a student of the market. You will study charts. You will study charting patterns. You will study charting philosophies. You will look at lots of different charts. Okay, you will learn all the different techniques that you can utilize to map out the charts. You will read financial news. You will watch the markets. So you will become a student of the stock market. So even with that level of education, though, mindset matters. The way we become successful and profitable traders is by working on our mindset and making sure that we are mentally focused on following our trade thesis, that we manage our emotions alongside each trade, and we follow our trade thesis, and we proactively manage our risk. Because at the end of the day, as human beings, we are not naturally wired to handle putting our hard-earned money at risk in the stock market. Okay, we don't like being responsible for it, and that's why so many of us hand off our money to financial planners who just end up losing it for us, especially during a downturn market or recession. Okay, you are far better equipped to manage your own money with the education than a financial planner is. But you've got to have the mindset and the willingness to have a trade thesis, deploy risk management, and be focused and disciplined in everything that you do. So we do have a 7-step process to developing your mindset. If you are going to establish yourself as a successful swing trader in the stock market, you need to set up a process for yourself to help cultivate that mindset. So first off, develop an effective morning routine. This is important. Now, depending on where you live, if you live on the West Coast, stock market for us opens up at 6:30 in the morning. So I'm up at 5:30 every morning, have my routine, get a cup of coffee, start looking at the news, look at the futures, start looking at some charts. That's my morning routine before the market opens. You need to develop your own morning routine, whether that's working out, going for a walk, looking at charts. You need to develop a routine for yourself in the morning that works for you. Number 2, never stop learning. The education is a powerful tool to continue being successful in the stock market. Number 3, always manage the risk and manage the losses per your trading thesis. Okay, again, every time we enter a trade, there is a trade thesis that is created around that trade. Why we're entering the trade, what the entry point is, what the exit point is, why the exit point is set at where it's at, how much of a percentage drawdown exists, and what is the rate of return that we expect on that trade. So when you establish that trade thesis, it starts to remove or help you manage some of the emotion that goes along with the trade itself. And this is why when people tell me that investing in the stock market or trading in the stock market is just like gambling, it's not. Not when you have a plan that you execute on each and every time that you put a trade in. Number 4, keep a trading journal. You need to keep a journal of all of your trades. Wins, losses, everything. You need to track every single trade that you make in a trading journal so that you have a record of it so you can continue to look at it and say, okay, I made this trade. This trade worked out. Why did it work out? This trade didn't work out. Why didn't it work out? Did I vary from my trade thesis? Did I react to something? Did I get emotional? Did I exit early? Did I not exit when I should have? Okay, these are all things in the trading journal that you need to be able to look back on and continue to review as you build your trading portfolio. The 5th recommendation for the 7-step process, observe other successful traders. There's people out there that have been trading for 10, 20, 30 years that are very, very good at their craft. You can always learn from them and, maybe join a mastermind community. And that may be something we roll out over time as we'll create a trading community group or a trading mastermind to bring people together, because there's certainly knowledge that can be shared amongst other people that are doing this. Number 6, learn to manage your emotions throughout the trade. And again, I say manage, not eliminate. So checking in with yourself as you have money in the stock market and you have that trade going. How am I feeling? Am I okay? Do I need this money? Do I need to pull this out because I need this money? These are things you need to be asking yourself as you are managing that trade to manage your emotions. Number 7, just remember the market is neither moral or immoral. It's amoral. It doesn't care. Okay, the market's going to do what the market's going to do. Patience and discipline. So there's times to make trades and there's times that we don't want to make trades. And knowing when not to make a trade is when you start to become a more successful trader. Knowing when to look at something and go, yeah, this trade setup, although it looks good, this isn't adding up. I'm going to sit out. So knowing when not to make a trade is a skill set that you will develop over time. Having that money deployed and being trading doesn't mean you're going to be automatically successful. It's a blend of knowing what the market's doing and when to say, yep, I'm going to pass on this, not trading today. And number 2, you need to fight what we call FOMO, fear of missing out. That's a very strong emotional term that exists almost everywhere in life, right? Marketers love it. They try and use FOMO when they're selling products, right? You need to buy this product or you're going to miss out. And it happens in the stock market as well. People will see a stock market price going up. They feel they're going to miss out on the quote rally and they buy, and then it pulls back immediately. They buy without doing a trade thesis, without having their analysis done, without having a trade plan done. They buy on emotion. And when you buy on emotion, the chances of that trade going against you are pretty high. You might get lucky. And unfortunately, if you get lucky, that's only going to build your confidence in a false way. So fight the FOMO. Number 3, learn to sit on your hands. When a market is choppy, right? When a market doesn't have a clear direction, when a market isn't clearly trending up or clearly trending down, we call it it's a sideways market. It gets very choppy. Very, very difficult to trade those markets. So in the beginning, learn to sit on your hands, meaning don't place a trade, right? If you feel the urge to place a trade, walk away from the computer. Okay, and we call it learning to sit on your hands because you may sit there and watch the markets, but you do not want to place a trade. Number 4, do not enter a trade unless it meets your trade thesis. Okay. this is where the discipline comes in. If you start going against the discipline and going against the trade framework and going against the trade strategy that is set up, the chances of you have a losing trade increase substantially. So do not go against your trade or do not enter a trade unless it meets your trade thesis. Last but not least, remember that the stock market is always going to present another opportunity tomorrow. Stock market's not going anywhere. And if you miss an opportunity today, there'll be another one tomorrow. If you remember that, then you are able to deal with the FOMO and the fear of missing out, because all you have to do is tell yourself, you know what? Tomorrow's another day. We'll see what the market brings us tomorrow for opportunity. Okay, that wraps up our first lesson summary. So we covered asking yourself why you want to learn to trade. This is something I really encourage you to think about. Write this down in your workbook. Answer this and be honest with yourself. Why do you want to learn how to trade? The next thing we discussed is what to expect if you're going to trade in the stock market. So these are some of the basics that you need to understand and expect if you're going to set up a trading business in the market. Most importantly, knowing that you're going to have losing trades. It's not if you have losing trades, it's when you have losing trades. It will happen. Third, we talked about mindset and the importance of mindset and how mindset matters to your trading business. Last but not least, we covered patience and discipline. Becoming a successful, consistent, profitable trader requires patience and discipline. All right, well, this wraps up our first module. The next module, we're going to discuss understanding market basics and market terminology. We'll see you in the next lesson.